Hi, welcome to this video today. What we are going to be doing is looking at one of the world's best traders, a guy called Bruce Kovner, and he is acknowledged as one of the most successful hedge fund managers of all time. Now, later on in this video, I've got my favourite 20 quotes from him to give general tips on how to achieve trading success. But before we get to the quotes, what I want to do is discuss his view on getting in on the best trade setups with his strategy. And in terms of the best trade setups, he makes a point which I think is very important for beginners in particular to learn. One of the best trade setups you will get is when you have low volatility in a currency pair and suddenly it breaks out of a tight trading range for reasons that no one seems to understand. If you're an experienced trader, you've probably witnessed this phenomenon, and they are always good risk-reward trades. Why? Because something has changed within the fundamentals to increase the volatility, and it is not speculatively driven, the breakout. It's driven by the big supply and demand fundamentals. Now, in terms of why that is so important is because you get a lot of people expecting breakouts on a chart. Okay, you see it all over the news wires. If X currency breaks above a certain level or below a certain level, it's probably going to Y. Now, how many of those breakouts actually fail when they're known to everyone? Well, most of them. Why? Because everyone has seen the breakout. And so, it is one of those phenomenons where if it's observed by a lot of speculators, it isn't going to follow through. And that goes back to the Heidelberg principle of physics, that the more observed it is, the more likely it is to be altered in the process. Now, you can look up the Heidelberg principle of physics, but in general terms, if everyone is expecting something to happen, it generally doesn't. You've got to keep in mind that the majority of traders are going to lose money. So if you see a potential breakout on a chart and everyone else is talking about it on the news wires, then be very wary of it because it probably will fade. Now, in terms of Kovner, he is not purely a technical trader at all. He says he likes technical analysis, but he makes the key point. There's a lot of mumbo jumbo said about it. And by that he means that all these people who say you can predict where prices are going to go, he's saying it's nothing to do with that. All it's allowing you to do is see what's happened in the past, get a good risk-reward entry, and look, basically have a good place to put your stop. Now, in terms of a very simple technique that he's got for spotting trades, it's to do with consensus. Now, at the end of the day, we want to know what the sentiment of traders is to the market. Now, as I just sort of made clear, on breakouts, when a lot of people are observing them, they're probably not going to happen. And of course, when a market becomes too bullish or too bearish and everyone thinks a currency is going to go in a certain direction, it probably is ripe for a turning point, especially if you get a bullish extreme or a bearish extreme. And he does a very simple technique, which we do here, which is basically get all the bank research and all the big Forex websites research, and just basically see how many of them are looking for a currency to go in a certain direction. And if most are, and technically it's overbought in an uptrend or oversold in a downtrend, you should be looking to go the other way. Now, I'm making this video on April the 29th, and in my weekly forecast for this week, I was saying about, for example, the Bank of Japan. Everyone expected them to basically cut their rates more negative. Well, that's just basically a good risk-reward trade to look to go the other way against the crowd. And, the result was a 700 pip decline in USD JPY. Now, with a trade like that, it's just worth going for. Just wait for the Bank of Japan announcement, put an order in, to sell the dollar against the yen, see what happens. You can have a very tight stop. And if you actually want to make money at Forex trading, Kovner makes the key point that you have got to be contrary to the extreme. You've got to do uncomfortable trades against the majority. And what he says he does is he works out what he calls alternative scenarios. And by that, he means he works out alternative scenarios of what might happen in the global economy. And he studies all sorts of different trading instruments. And I think that is always worth doing. If the consensus is expecting certain things to happen, think of what could go wrong with their view. And in terms of trading, a lot of people tend to think that the banks and the brokers and so forth, the big guys, make a lot of money. Most of them don't at all. And you should never be intimidated by them or going against them, okay? And Kovner makes the key point that when he first started trading, he was taught by one of the other great traders, Michael Marcus. Michael Marcus said, you really can make $1 million, if you apply yourself. Now, I'm not saying that you're going to make $1 million, but what I am saying is never, ever be intimidated by the markets and the big boys, so to speak. Your opinion is as good as anyone else's, especially if you get into that contrary mindset. Always question the majority view. Always look to go against it. And I think, if you want to make money at trading, you just have to be very contrary, and you have to take those uncomfortable trades that no one else is going to take. And in terms of, Kovner, obviously he's made a huge amount of money, but he makes the key point that at the end of the day, even the great traders are going to have periods where they make a lot of mistakes. As long as your judgment was good and it's in line with your trading program, just basically keep going. A loss in the markets doesn't mean you did something wrong. You just got to keep going with your plan and system. Now, in terms of Kovner, he trades actually a wide range of different contracts, from currencies to bonds to stock indices. He makes a key point for me, which again a lot of beginners don't understand, that if you actually have a lot of interest in a certain instrument that is speculative, okay, it is harder to trade than a market that has low speculative activity, because speculators create that choppy price action, and that can very often take you out on stop. For example, if you take the Euro USD, it can be very, very spiky. Most traders want to trade the Euro USD, but it very often is not the best pair to trade. There's plenty of pairs that you can choose to trade, many with less speculative interest. And Kovner makes the point that very often you get fantastic opportunities in the crosses or in the exotics. And the reason you get such great opportunities is they don't whipsaw sometimes as much as the majors. So you should never look at the name of the contract. You should basically just look to trade the best formations that are in line with your trading strategy. Now, what I'm going to do now is I am going to finish talking, and I'm going to do my top 20 quotes from Bruce Kovner. They're over a little bit of surfing footage, and for those of you who don't normally watch my videos, the reason they're over surfing footage is simply, I always think as traders, we are like surfers. We actually have to catch big waves, ride them with confidence, milk them for all they're worth, and basically be prepared to fall off occasionally, and also obviously wait for big waves. So here are my top quotes from Bruce Kovner, and I hope you enjoy them. I hope you enjoyed this video. Take care and have a good day.